Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, as always, I'm so excited to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, we are going to be deliberating on the current market dynamics from both technical and fundamental perspective using our basic tools such as economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And today happens to be one of the most important days of the week as we look forward to some significant economic features from the United States, which includes the retail sales data, the PPI data, and of course the I think the a data from the labor sector, which we will be looking at today. And of course, majority of market participants will be looking forward to this event for fresh impetus into this market. So we need to be very, very cautious today. And one interesting thing about this event is that they have a high chance of bringing in liquidity into the market. So as usual, we are going to be deliberating on the current market structures, looking at ways through which we can position ourselves strategically for the next big move that will happen today. So I encourage us all to stay tuned in so that you don't miss out on the ideas we will be deliberating on today. And for those of you who are joining us for the first time, I do know that you might be wondering what this is all about and what is it that we really do here on the Forex Morning Mastery. Well, as technical traders, we usually gather here with the utmost intent of doing follow-ups and reviews of our current trading positions in preparation of the London and New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing that information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the market sentiments today. And the way we can do this is by checking on the economic calendar, and we do know that these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, so far this week, and based on the asset we've been monitoring, we have been focusing on economic features from both the United States and the United Kingdom economic docket. And so far this week, we've had some high impactful event, which of course has driven the market sentiment in one particular direction or the other, which of course we did try to capitalize on. On Tuesday, we had labor data from the United Kingdom, which came in the form of the ILO unemployment rate, the employment change, and claimant count change, which of course all came in revealing how vulnerable the labor sector in the United Kingdom is. So it's not a very good data for the United Kingdom anyways. However, we have some bullish outlook on the GBPUSD chart, which we will be deliberating on today and see how the market are preparing for today's event. Then we also had another impactful event, that was the consumer price index, which came in a little bit higher than expected, giving us an insight into how sticky the inflation is in the United States. And of course, this adds incited speculations of the Federal Reserve keeping interest rate higher for an extended period of time, hereby favoring the dollar on that day when the event happened. But in recent time, you would have noticed that the dollar is currently struggling, as we can see that based on the CME Watch Tool report, we can see that sentiment is already shifting towards an interest rate cut in the month of June. So this is bringing in some interesting dynamics into the market, which we will be taking into consideration while we review the current market structure from a technical standpoint. Now, for today, Thursday, March 14th, we are looking forward to a couple of high impactful events from the United States. And one of the events we are looking forward to today is coming up in about 4 hours from now, and that is the producer price index, excluding food and energy, of course. Now, for those of us who do not know how important this event is, well, you see, the report is a measure of the average change over time in the selling prices received by domestic producers, excluding volatile food and energy sectors, of course. A higher than expected reading suggests potential inflationary pressure impacting market sentiment by signaling changes in production cost and potential effect on consumer prices. Now, this is another inflationary gauge that the Federal Reserve will be looking forward to today to guide their the monetary easing policy cycle for the year 2024. And we all know that next week everyone is looking forward to the FOMC meeting. We have a 2-day meeting next week, which there will likely be giving us some insight into the monetary policy outlook of the Federal Reserve. So this is one of the key events that majority in the market will be looking forward to as regards to that. Remember, we saw the CPI on Tuesday, which came in very high. So the producer price index is likely going to either complement what we saw on Tuesday or probably go the other way around. So we look forward to see what the actual data will be. Now, the previous data came in at 2%, and based on what is on ground, economists are projecting 1.9%. So we look forward to see what the actual data is going to be on that one. Then we also have the retail sales data, which will be coming up simultaneously with the producer price index. And for those who don't know, the retail sales is also a key economic indicator that measures the total receipts of retail stores, representing consumer spending. Its impact on market sentiment is considered to be significant as well, as it provides insight into the health of the economy and consumer confidence, influencing expectations about future economic growth. So we look forward to see what the actual data will be on this one, and based on what we have on ground, it appears that economies are projecting an expansion in that sector. As you will see, the previous month reports for the month-on-month and the sales control group came in at a deficit, which was a contraction, and now we are having a positive 0.8% expansion. So we are looking forward to what the actual data is going to be on that one too. Are they going to come in just as expected, below expectation, or even beyond expectations? But if they come higher, we know that this is going to be affecting the US dollar positively. Now, what we are going to be doing today, as we all know that the anticipation of this event as a way of influencing the behavioral pattern of market participants in this market, which of course would reflect on the chart as price action. Now, what we are going to be doing today, as always, is to sniff through the current market dynamics, looking out for structures and patterns that we can use to strategically position ourselves for the next move. And one thing I've come to understand is that as this event draws near, inner cycle, major key players in the market have a inner cycle with this department that have an idea of what the data is going to be like. So in preparation or in anticipation of this data, we usually see them build up positions ahead of the event, which of course would reflect on the chart as price action. So what we are trying to do is to try to identify their trail so that we can be on standby to capitalize on the next move that will happen. So with that being said, and with the information we have gathered here, let's dive right into the charts. So as always, the first asset we are going to be taking on this morning is going to be the USOILSPOT, and what a tremendous profitable week we have here on this asset. Though the week did not start very rosy for us, as we saw the market was a little bit choppy during the first couple of days of the week before we finally saw that traction resume during yesterday's trading session. And if you remember vividly, we had the situation at the beginning of the week where price was initially confined within that $77.40 level and the $76.80 area to emphasize the prevailing uncertainty in the market at that point in time. And usually when we have a range bound structure like this, you know how we do it. We exercise patience and wait for market participants to make a decision, which will come in the form of either a breakdown of the support line to give us an opportunity to buy, or the breakout of the resistance line of that range to give us an opportunity to buy. Breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And since the week began, we have positioned ourselves above the zone to capitalize on this buy opportunity, and we had a couple of buy positions, but throughout the course of the week we saw price coming back into the entry point break even area at every point in time. And as at yesterday's live session, we were becoming very skeptical about this bullish traction as we saw price break down a couple of these ascending trend lines we identified at the beginning of the week. And I did emphasize here yesterday that the only condition that will make us sell is for the key level to be broken and retested before jumping into any sell position, which of course never happened, hereby negating any idea of considering selling this asset at all. So as it is right now, we have about how many buy positions right now? 1, 2, 3, 4, 5 buy positions currently running in profit. And for those of us who did capitalize on this opportunity, well done and kudos to you. Now at this point in time, since price action had moved significantly well in our favor, it is high time we moved all our stop losses and secure this current buy position, as we are at a crucial juncture in this market. And if you would ask me, I will be suggesting that anywhere below the last entry, that is between the $79.25 level and the $79 area, seems most appropriate to move all our stop losses to. And always remember that you do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Will buyers continue the momentum? Will sellers have a chance of pushing price to the downside? Well, the answer lies within the various factors that is affecting the sentiment in this market, and we are talking about the fundamentals. Yesterday I was telling you about the anticipated report from the US Energy Information Administration, that is the EIA. And of course, the data came in surprisingly low as we saw a decrease of 1.536 million barrels in US crude oil for last week, contradicting the expectations of 1.338 million barrel increase. Now, this decline is the first time we are witnessing such in the last 7 weeks, and it further emphasized that demand is hitting into the supply in the global market. And what this simply means is that when demand rises and supply reduces, what happens? Our simple economics tells us that price will definitely rise. And of course, this has also supported the positive traction we've seen in the market so far. And remember, a couple of days ago, we also saw the API weekly crude oil stock report, which came in at an unexpected decrease too as well, had 5.521 million barrels for the previous week, and this was below the expectation of an increase of 0.40 million barrels. Now, in addition to all of these factors, we also have the geopolitical tensions in the Middle East, where we saw concerns over potential supply disruption following the Ukrainian attack on Russian refinery during yesterday's session, further shutting down that depot, and thereby resulting in concerns about supply into the market. This could also further affect and push the price of oil to the upside. Now, furthermore, we also have speculations surrounding the central bank's decision, the potential of major central banks across the globe of cutting borrowing costs, which could also drive the price of oil higher. Now, how does that drive the price of oil higher? Well, if interest rates becomes lower and borrowing costs becomes lower, what this simply means is that, for instance, like the US dollar, for instance, and you know how the USOILSPOT is a US dollar denominated asset. Now, whatever happens to the US dollar will definitely affect the USOILSPOT. Now, if the dollar becomes cheaper and the value of the dollar drops, then other currencies will find it easy and cheaper to buy the dollar to purchase a USOILSPOT, and this also will increase the demand for oil, and this will result in higher prices. Now, if we take into consideration all of these developments and factors, it suggests that price will continue to rise. Now, if we are going to take all of this into the chart to see what is going on here, well, the current outlook on the 1 hour time frame is still looking very, very bullish. Now, why have I said so? Well, remember, we had a couple of ascending trend line which we marked out at the beginning of the week, and you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in our buy position and look out for more opportunities to maximize the bullish momentum. And as you will see here, we have this ascending trend line in place. Price action still remains above the structure, so it's a simple thing that price still maintain the bullish bias. Now, as long as price remains above this, we will continue to look out for patterns and structures that support the idea of buying. Now, if it so happens today, more probably in the first couple of hours after this, price started finding selling pressure in such a way that it drops below the $79.40 level, we need not panic, as we have an ascending trend lines here, which could be a barrier that will negate sellers' attempt, hereby pushing price further to the upside. So let's mark out those trend lines. They are very, very important, and they are going to be playing a major role in guiding our decisions today. Then another thing that we'll also want to take into consideration here is that $79.40 area, which has been a strong selling niche since the beginning of this month. Now, we want to see price action continue to find new highs here. Now, this will welcome more buying opportunities for us. Now, I'm looking at another level at the $79 $1.80 area, which we can actually add more buy positions to if price action goes ahead to break out of that structure too. So for those of us who have this who are part of this profitable journey, we can have another buy stop order above the structure, and then we have the highest level for this year at the $80.30 level, where we also want to be having a buy stop order to maximize the potential of this bullish move. So this is what we are looking at today. We maintain a strong bullish bias on this asset. However, if it so happens today that price drops significantly in such a way that it breaks down these ascending trend lines, then we might be on the verge of joining a bearish move to the downside. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates if we have a breakdown of this ascending trend line happen today. So I encourage us all to mark out all these levels and trend lines, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5, 10, 15 seconds off to see if we have any questions before we move on to the next asset on our watch list. And please do not forget to give the video a thumbs up. Your likes are very, very valuable to me. If you have found this content helpful and useful in making your independent trading decisions, why not give the video a thumbs up? This is the cheapest way you can actually support this community to grow. And thank you very much as you do so. All right. So in the absence of no questions, I want to assume that we are all on the same page, and I'm here to see your likes, guys. Please, if you have found this content helpful and useful, kindly give the video a thumbs up. Your likes are valuable to me and also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. So we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at today is going to be the GBPUSD. And what an interesting situation we have on this asset. Remember, we were selling this asset at the beginning of the week before we begin to see some buying potential during yesterday's live session. And for the sake of those who missed out on our earlier editions, and for educational purposes, let's run through what really happened at the beginning of the week and what led to the decisions we made. And before I go into the details, I want to reiterate that during the Forex Morning Mastery, we only focus on our execution time frame, which is the 1 hour time frame. Now, if you do want to have a background knowledge of how we got to this point, that is the top-down analysis on all of these assets, then I encourage you to watch my weekend videos which I did on this asset. If in any way you missed out on it, the links to those videos are right in the description box of the current video you are watching, so you can check them out after the live session to have a better understanding of how we got to this point, and you can as well use it as an educational tool in understanding how to use price action. So with that being said, let's go back into the business. So what we did at the beginning of the week right here on the 1 hour time frame was the first thing we observed was a consolidation phase where we saw price confined within the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range bound structure like this, you know how we do it. We exercise patience and wait for the market to make a decision, which will come in the form of either a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And as you will see, price never came close to the resistance line at all, and it was more of trading around the support line, giving us the privilege of joining our first sell position for the week. And prior to the live session on Monday, we already saw the breakdown of the support line, and I did mention that for those of us who missed out on that opportunity, we can look at a retest of structure to join the bearish move to the downside. And lo and behold, we had the price come back, retest structure, triggered the first sell position for the week. And remember that we kept on adding more sell positions to maximize the bearish move, as we had the breakdown of the 1.28250 triggered the second position, and we also had the 1.2800 level triggering the third position, while the fourth one was triggered at the 1.27760 area. So as at the first half of the week, we were already profitable on this asset, and well done to everyone who stayed faithful with our analytical approach. Now, during our live session yesterday, we begin to notice how sellers were finding it difficult to continue the bearish momentum. The lowest point for this week was around the 1.27600 area, and the subsequent attempt by sellers to continue the momentum was stalled around the 1.27760 area, as we saw a new higher low to work with. And while looking at this yesterday, we begin to notice a potential reversal happen here, especially after taking into consideration the impulsive move that brought us into this area. We saw this retracement move, price came back into the structure, and it was at this point we were beginning to consider a reversal setup where, interestingly, our neckline for this reversal pattern shares a beautiful confluence with that key level for the week at the 1.2800 area. Now, you know how we use our key levels in this community. We want to see price action trade above the key level to look out for patterns and structures that support the idea of buying. Now, another intriguing thing about this structure is how beautifully that descending trend line, which was supporting this bearish momentum since the new week, also shares a confluence with that neckline and key level at the 1.28 area. So at this point, we were saying that if price can break out of the structure, it will also break out of that descending trend line to emphasize the strength of the buyers at this point. So with this situation identified here yesterday, we decided to capitalize on that reversal setup if price action broke out of the structure. And look at what happened. Price broke out yesterday, but most of the part of yesterday stroke the Asian session till this morning, the pound sterling our position was running in a loss. And in fact, at the time I was giving you the commentary on both my TradingView and Telegram platform this morning, we were still running in a loss. But at this point, you will see price has edged higher, and in fact we currently have a minimum of about 8 pips running in profit at this point. So we hope that this momentum will continue to the upside, and I have the opinion that market participants will be banking on the expectations that the Bank of England will be maintaining higher interest rate for an extended period of time, unlike the Federal Reserve, who are already initiating rate cuts, are already considering rate cuts during in their June policy meeting. So this for me is going to be giving an optimistic sentiment for the buyers of pound sterling, especially around this strong buyers for global equity market, which is likely going to be limiting the upside potential of the US dollar. And another thing we're also going to consider here, which might have been the reason behind this choppy market condition in the last 24 hours, may be due to the US macroeconomic data, which is coming up later today. And you know how this kind of high impactful event affect the sentiment in the market. As market participants anticipate this event, we usually see consolidation phase happen, where it will reveal that major key players in the market are stepping aside, waiting for this data to come in before making any aggressive bets. And I think that is major reason why we have price action trading around our key level in the last 24 hours. So on the GBPUSD, I still maintain a bullish bias on this asset, and the only condition that will make me want to sell the GBPUSD today is for price action to drop below this descending trend line. And in fact, I will be looking at a breakdown retest of the 1.277600 level before selling this asset today. So let's see how the market will play out. And as you will see, both the descending trend line and that key level at the 1.2800 area is going to be playing a major role in guiding our trading decisions for today. So I encourage us all to mark these levels and trend lines out on our chart, as we will be needing them to guide our trading decisions for today. Then there's another structure I would like to include into this chart after noticing the series of higher lows here since yesterday's trading session. So we have a new ascending trend line, which we'll be calling a temporary one, at least for the meantime, as we will be using it to guide this bullish momentum. So let me thicken it a little bit to emphasize its importance at this juncture. So you want to be marking this one out, and let's see how far this trend is going to go. If you have any questions whatsoever as regards to the current setup or my illustration so far, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the final asset on our watch list. You can use that time to also mark out these levels on your chart. All right. So in the absence of no questions, let's take this as a confirmation that we are all good to go. So it's on this note, we'll move on to the final asset on our watch list. So the final asset we are going to be looking at this morning is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And as at yesterday, we had a buy position triggered. Remember, we were positioning ourselves above the $2,166 area. And I did mention here yesterday that if price gets into that 2,175 level, we want to move all our stop losses, secure this position, as this area was considered to be a potential sell window, where I did emphasize that we will be looking out for reversal setups like double top, head and shoulder, or even a rising wedge to capitalize on bearish momentum if that ever happens. And one of the reasons why we said we should move all stop losses around this area is the fact that you can see how that area also shares a beautiful confluence with that descending trend line, which of course has been supporting this bearish idea since the beginning of this week. And I hope you did move your stop losses. If you had done so, you must have been taken out of that buy position with a reasonable amount of profit in that regard. And while price got into the structure, we begin to see selling pressure resume around this area, and it gave us something like a reversal setup, as you will see here, something like a double top structure. Though this happened in the middle of the night for me, as at this time I was very much fast asleep, so I missed out on this opportunity. But for those of us who did capitalize on it, well done and kudos to you, as you will currently be running with about 40 pips in profit at this time. Well, at this juncture, I will be suggesting that we move all stop losses accordingly on any sell position if you have any, as we may likely see a change in tide based on the fundamentals that we're looking forward to today. At this point, the US dollar is looking as if it's trying to attempt a rebound in the midst of a shift towards a risk-averse market conditions, where the US Treasury bond yield currently is consolidating its recent gain, which in turn is limiting the upward momentum for gold prices. And if you would recall, a couple of days ago, we talked about the high US inflation data. We had one last month, which came in at 3.1%, and for last week again, we saw another 3.2%, which eventually raised speculations that the Federal Reserve might delay interest rate cuts, hereby supporting the Treasury bond yield to grow and eventually bolstering the US dollar. However, from the current CME Watch tool, market sentiment is leaning towards expectation of a rate cut in June. I'm not sure why that is happening at the moment, but that is the fact. That is what is running at the moment. And if this is going to persist, then we might likely be seeing it affect the growth of the US dollar today. And additionally, the ongoing geopolitical tensions in the Middle East, we have the Russia-Ukraine conflict, we also have the Israel-Gaza situation, may continue to support safe haven assets such as the gold. Now, as market participants anticipate today's event, that is today's US macroeconomic data, which has a tendency of influencing this current market structure. Remember, we are looking forward to the retail sales data, the producer price index, and of course the weekly jobless claim. I do hope you guys have marked out the timing of this event, as we will be needing to be on standby prior to the event, marking out structures to be on standby to capitalize on the next move. So with that being said here, how do we relate these fundamentals to the current market structure? Now, in order to understand what is going on here, remember during our live session yesterday, despite the strong bearish momentum we saw this week, remember we did identify this ascending trend line after connecting the series of higher lows. And as at yesterday, we were thinking of this bullish momentum to probably be a retracement of this bearish move, where the appearance of selling pressure here could incite a downtrend continuation. All right, where the ascending trend now will be broken and then further welcome more selling opportunities. Though I have a sell stop order right below the ascending trend line here, with the hopes of capitalizing on a bearish trend and then thinking of adding more positions at the breakdown of the $2,160.50 level. However, if we consider the fundamentals, which of course supports the ascent of safe haven assets such as the gold, we wouldn't want to ignore the potentials that buyers may come in, considering this ascending trend line, where the appearance of reversal pattern could incite a move that will break out of this descending trend line. Now the question is, how do we position ourselves for this move if it eventually happens? In order to do this, we will need to scale down to a much more lower time frame so that we can have an idea into how market participants are thinking above this ascending trend line. Now, what I did this morning was to scale down into the 15 minutes time frame, where I did have a simple trading setup that we will be using to guide our trading decisions for today. And I wonder why my XAUUSD is taking longer to load this morning. Okay, finally it's loaded. I have, okay, all right, so right here on the 15 minutes time frame, I was able to identify a simple setup, and what I did here was to take into consideration the character of price action in the last 13 to 15 hours of this market. And the first thing I was able to do here was to acknowledge these lower highs, which gave me this beautiful descending trend line you will see here. So that is one. Then I also marked out this level. Hold on a second, I guess I'm having network problems. Okay, so we have this descending trend line. Then I noticed that as soon as price got into the 1.268 area, since the early hours of today, we begin to notice some buy pressure resume around that area, which interestingly shares a confluence with that ascending trend line we spotted on the 1 hour time frame. Now, the question here is, will price respect this ascending trend line to begin the second leg of the bullish momentum that started yesterday, or are we going to see a breakdown of the structure to continue the downtrend move? So as a result of this, we have the 2,168 level, which we will be looking for buying opportunity. And as a result of this, buying above the $2,168.50 level makes a lot of sense at this point, as you will see how this level shares a beautiful confluence with that descending trend line right here. And as it is, the last 30-45 minutes has seen price breakout of both structures, and we may likely see a retest before the uptrend continuation happens. So at this point, I still hold on to a bullish bias here if price continues to maintain its traction above the $2,168.50 level. And if price continues to climb and find new highs, I'm looking at the 2,175 level to add more buy position, hereby maximizing the potential of this bullish move. So that is how I'm going to be looking out for buying opportunities today. However, in as much as we're looking out for buying opportunities, we cannot ignore the potential the US dollar have, especially when the US Treasury bond yield is gradually gaining momentum and has since been consolidating its recent gain ahead of the US macroeconomic data coming up later today. And if that is going to be the case, how do we see this reflect on the chart? Well, a breakdown of this ascending trend line will be all we need to capitalize on the bearish move, and as a result, I have a sell stop order already sitting below the $2,166 level to capitalize on this bearish move. However, I still think we can join the bearish momentum before the breakdown of the 2166 level happens, if price can give us the leverage of confirmation, like a retest of either the $2,168.50 level or the ascending trend line where continued selling pressure right here will give us signs that buyers are finding it difficult to climb back above the ascending trend line, giving us opportunity to continue the downtrend. So this is what we will be looking at today, and as you will see, our center of focus for today's trading session is between the $2,168.50 level and the $2,166 area, where depending on the direction of the breakout will give us an idea of where price is likely going today. So I encourage us all to mark out these important levels on your 15 minutes time frame, and of course do not forget to mark out these trend lines too as well. So this is my simple view on the XAUUSD for today right here on the 15 minutes time frame. Let's see how the market will react to this current structure, and trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5-10 seconds off to see if there are any questions. And I also want to state that we have the links to the XAUUSD live window right in the comment section. It is pinned at the top. You want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. For those who don't know what the XAUUSD live window is all about, well, this is a platform that was born out of popular demand from members of this community, where we come together on a daily basis to monitor real-time price action on the XAUUSD during the New York session. So it officially kickstarts about 5 to 10 minutes into the New York session and lasts through about 5 to 7 hours depending on the volume of trading activity for that particular day. So it's a session you don't want to miss, so be right around so that you can see how we manage our positions in real time. And do not forget to support the project. I still need to see your likes. We have over 10 people on board, and the likes we have here is not tallying with the number of people we have. So please kindly support the project, give the video a thumbs up, and thank you very, very much as you do so. So let's see if we have any questions, and before we round off on today's Forex Morning Mastery. All right, so in the absence of no questions, I want to take this as a confirmation that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys as we were able to take on all of the 3 assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and the XAUUSD, all of which we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And I do hope you guys have marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do is exercise patience and wait for these structures to mature. And there we go. I see your comment, APRA278. I appreciate the knowledge and effort. Thank you. You're welcome. I can see you, Dre995. Good morning to you. If you appreciate the efforts, kindly give the video a thumbs up. Click on the like button and appreciate the video. Thank you very much as you do so. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to protect your portfolio. For those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for another interesting session tomorrow, which happens to be the last trading day of the week, where we will definitely be seeing some strong traction as market participants round off their trading activities ahead of the weekend. And of course, we do not want to miss out on these opportunities, so stay tuned in and do not miss out on this session. So it's on this note I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.